Good morning. Welcome to another live trading session with Man Over Market. It's Tuesday, March 24th, 2015, 10 a.m. Central Standard Time. This live trading session is also broadcasting on YouTube. Please know that there's about a 30-second delay in the video transmission. Lewis Borsellino, author of Day Trader, From the Pit to the PC, will be sharing his charts and proprietary indicators during the session. Also, by way of disclaimer, trading futures, options on futures, and retail off-exchange foreign currency transactions involve substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or most of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. The following information is an expression of our opinions and is provided for educational purposes only. Take it away, Lewis.
That's the way I feel, guys. I mean, this market has been terrible, terrible. But take a look at this. This is what we're looking at for profile so far today. It just, does this look finished to you? It's crazy, absolutely crazy. We went down today. We did take out the Globex low. And I was looking for 90 quarter, and then I guess we had some numbers and come back out, and this is what we got so far. So just looks like it's more of the same. If we get in this trading range, we got I got this this mild band right here, right? I mean, basically what was I showing you here? 97 quarter down to 94.75. So we got the CCI. Here's the two moving averages. They are bearish, but see how sideways they're moving. They're not pointing straight down. We got a mixed. We're mixed with our the ES is in a sell, and the Dow is in a sell, and the Nasdaq and the Russell are in a buy. So what we up 16, up 14. We're basically up 1. So I'm like, these are the kind of times you just should put your hands in your pocket and just read a book and just watch the markets, because if there's no action, you're going to get yourself chopped up. That's exactly what happens. So this is just a small range. Like I said, I don't know. This doesn't look finished to me down here. I think it's going to have to fill in. Okay. But I mean, it could do exactly what it did yesterday, and spend, what did we spend? 4 hours in the range that we had up yesterday, and then 4 or 5 hours, and then it decided it was going to break out. We've gone up, and we can't get inside value. Some of the guys that are with some of the research out there, Morad is talking about the percentage. We didn't open out a range, so there's like a 65% chance that we could go up and touch 2103. I think we're going to have to get inside value, take out the highs, and then we'd have to take out the 5-minute pivot. And then, yeah, I'd agree with them. But we're sitting inside this range right now, and it's going to consolidate, get ready to break out, as you can see. If you are sensing frustration in my voice, then you're correct. All right, so we better just go right to questions, because I'm terribly frustrated with the market right now. And I think it had a lot has to do with just got out of rollover, but the fact that we're at these levels, and this market is being so manipulated by the Fed and by all the central banks. I mean, how do you even trade it, right? We still haven't recuperated from last week. I did put this. I've been putting this chart up. Let me go to the other one. I've been talking about this Fibonacci chart. When in doubt, go talk to Fibonacci. All right. So I put this low in from basically, what is that, 115, and I got this high. Is that 115? Yeah. 116. And this is the high up here, okay, from 225. So I talked about the fact that I thought that you know, last week we defended this area right in here, the 44 area down to 36. So last Friday, not a week ago Friday, we were down in this area and we rallied about 6,500 points. Looks like we're looking, we're basically have a up, down, up, down, up, down, up, down. This should be an update, I guess, today, right? There's the way that it's traveling. 2103 is our key if we're going to get out of the range. Okay, we got to get higher. We got to go above that 2103, and then we're starting to break a little bit out of this range here. Okay, but we got to get inside values, which is 98.5, right? 98.5 is the key. All right, and then if we got inside value, take out the highs, we may go here. We got the Dow starting to move up. Here's the Dow. Going at its 5-minute pivot. Actually, yeah, here it is. It's starting to. So it's looking like it's going to go after the 5-minute pivot. All right, we'll see. It's painting a dot here. You got about 2 minutes. This is great because you have to get a 5-minute close above that. Okay, to verify that it's taken out the pivot. Okay.
Sisters in a buy?
Nasdaq's in a buy, Russell's in a buy, the Dow is about to go to a buy, and the S&P's 5-minute pivot is up here at 2101. Okay, we're now get inside value. We did take out the high. We took out the high of 98.5. Okay. We got a Globex high of 21 even, which we have to take out. And then we also have, actually that's 2101 is where we're sitting with the 5-minute pivot. And then we got a bull bear zone at 2103.5, and we got the point of control at 2103. Okay. So as you can see here, we've broken out of this range that I've painted. Okay. Broken out of the range. The Vance decline is broken out of the range. So if we get inside value and take that out, we'll be looking to touch 2103, right? That would be our next target.
Are you ready for a question?
Go ahead.
Carlos has a question. What is causing the low volume? When should we expect it to pick up?
I just think where the market's where it's at. And I'm going to tell you something. Even to the professional traders, unless they're not on the inside know, I'm talking about hedge funds and so on, unless they're in the know. I mean, it's so hard to trade this thing when you get news like we did on the, legit. Last week, they took the word patience out, but they basically said We're not going to do anything unless the data tells us to do it. Isn't that the same thing as patience? And the market rally like a bat out of hell. And they're not, you're going to get me crazy. Where are they going to go with the interest rates? Are they going to go, oh, we're going to cut it a basis point? They're going to cut it 25 basis points. No big deal. It won't be a big deal. I'm almost hoping they do it so that, the market had it factored in and then we could trade. So here we go with our CCI. Remember, the CCI does not go from green to red. It goes from green to gray to red to gray. Went to red. Now we're crossing. We crossed the center line. We're here, right? This would be getting to the overbought scenario. But let me see. Did the Dow take out its pivot? Yeah. So here's the Dow. Had the 5-minute close. We got 2 dots. So the S&P, people, is the only one that is not in a buy, and we're struggling right here to get above value. So once we get above there, I think we'll be in a better situation, and then our targets are going to be here. Let's look for. I'm going to go back to this and see. What's 2094 half plus 350? Okay, 2098 even, and then plus 350. So we're 2098 from the low of bracket D, one rotation.
2101.
Puts the 2101 half, okay? That would take out the 5-minute pivot. Third rotation. $21.05, which magically is the top of value, right? So if you can surmise anything from what I just said, I guess we'll be in good shape. Any other got questions out there?
Barney wants to know, what's the Italian expression for this market sucks?
This market sucks. Let me think about that one. Hold on a second. I will go and give that to you in 1 second because I go to my language translator. See if I can find it. I know I have it in here somewhere. Oh my goodness. So we're struggling at right here, right? Which our point straight up on the CCI. We're waiting for confirmation for our 2 moving averages here to cross. They're green and they're pointing up. Okay. How about any other questions out there?
Yes.
Go ahead.
How do you use your VPOC in your trading? What is the significance of the VPOC?
All right, so volume, point, and control, right? So yesterday, you take a look at this. All right. Wait, I'm sorry. I got to put this together, make sure I know where I'm at. Okay. Now we're going to go here and split this up to today. All right. So right here, you see this is yesterday's VPOC. Let me split that. So 2103, 2103. So that means yesterday, that was the most volume traded at that point, right? So today, I basically said that we're trading in a range from 91.5 up to 2103, right? So we took 91.5 out by like 100 points, 4 ticks basically, and now we're going to test the other side of the range. So, like I said, there's been studies done that when you open up, if you don't open up inside a range or outside range, so meaning we didn't open up lower than the Globex low, okay, there's like a 65% chance you're going to go test the previous day's VPOC, right? All right, so for us, we got a couple things going for us on the positive side right now, right? First of all, we've got the NASDAQ up 21, everything's up. We're up 4. We got a positive, everything's up. We are testing to get back inside value, right? Okay, we're testing that right now. And we got a magnet. This becomes like a magnet. 2103 becomes a magnet because it was yesterday's point of control, okay? We also have all of the 5-minute pivots have been taken out, okay? So they all have gone positive on the day, and then the S&Ps is sitting here and we're still struggling, and we're waiting for our CCI to get across, okay? Get a little bit of a cross. So that's how you would use the VPOC, right? Now it looks like, you know, and when you look at profile, and I don't know everything about profile, but this has become the long buying tail, okay? And this is kind of forming a P, and when they form Ps, they tend to be bullish, okay? Now, here's another thing. 2103 would almost be exactly what 1.5 times the IB range would be, right there. So now that becomes another target for me, right? Because we're looking at the VPOC of 2103, and these markets like to get to 1.5 times the range. The next key area right now is 2101 to see if we can take out the Globex high, right? So that's what we're going to be looking for, the 2101. So those are all kind of things that you use to get a consensus on where you think the market's moving, right? Did that answer the question? Whoops.
Sounds good. All right. ADM has a question. When stocks are stagnant, do you look elsewhere for volatility? Do you prefer to just trade CME contracts? How difficult is it for you to trade your S&P size in other markets?
You know what? I grew up on 2 markets, gold and S&P. So I kind of, I favor these markets. I just kind of would, I look at oil. I've been trading oil because it's got volatility, and I think it's just a matter of this. The more time you spend doing it, the easier it becomes. All right. So now we're looking to take out the high here, the Globex high. All right. So I'm going to split this here. Let's see, bracket E. Okay. We just took out Globex high. Oh, we Globex high is here, right? 2101. I'm sorry, 2101. We just got to 2021. Okay. So I think the key is, if you get conditioned in one market and it dries up, like if the S&P stays like this, then you got to go to the markets that are moving. You go to oil, or you go to gold, or you go to something that will suit you. But at the end of the day, you got to go to you got to get trade a market that's moving. And usually, what I've found out is that what happens is that you start trading in another market. Like when the S&P got real bad back in the 80s. Well, after the crash of '87, it took it took a couple of years for the market to come back as far as volatility. There was just no interest in the market. People were so beat up. But at the end of the day, what happened was that because of that, I started trading euro dollars, going in the morning and so on. And it takes a while. It takes some time to get used to what markets when they trade. So you're asking me a question. Can you go back and forth? I think you can specialize in one and you can look at other ones as alternatives. But once you start with one, it's going to take you a good, I would say, 2 to 3 months of watching it every day, day in, day out, to get used to it, the way the market moves. So the question is, it's not as easy as you may think, but if you make the switch, and then what I was about to say is that you go to make the switch, and what happens? The other market that you grew up with starts moving again. So those are some of the things that are, more frustrating things about this business.
Okay. Another question from one of our Top Stuff guys, Fred Decker.
Okay.
Question for Lewis. Any thoughts on CL? He actually has 2 questions, so let me put them together here.
Yeah.
I usually trade crude oil later in the day after market profile has formed. I'm looking for a way to get involved earlier. Do you have any tips for getting involved earlier in the day?
Yeah, CL is a little, is kind of volatile, but like I pointed out today that I thought that the crude, all right, in fact, when the market opened up and it was breaking today, I said, 46.90 would be the key, right? So this is where it moved out of the middle last night, 46.90. So I'm looking at if this market can't, take out, well, let's say if it doesn't take out the lows, then I think it'll start to keep heading up higher, right, from right now. I think that this area right here, 47.53, all right, is the area that I'm looking at. And look, I'm going to give you a little hint. A lot of you probably know that bracket D is known as the counter trend period. And if you look at bracket D, the low of this is right around here, bracket D, okay? And it ended up being the low, and we've been rallying off of that. So those are, some of the, little things that profile people come up with, but then sometimes it doesn't work, right? But so it's something you have to look at every day. Now we're looking, are we gonna go take out the 5-minute pivot, right? So, that if we take this out, then I'm expecting, right? So so basically 2101 is the Globex high, okay? And we got our 5-minute pivot sitting there, So, that's going to be, key for us. And the fact that the other ones have taken out their pivots. I hope I answered the oil question. I agree with you, though. I think that if you're trading oil, especially with its volatility of late, you need to let the profile fill in, and then look for trading extremes, any violations of those extremes, if that makes sense.
Yeah, so he's asking, is there any way he can get involved earlier? You're saying he's doing the right thing by.
Yeah, I think I think what you do is you kind of establish, you come in and see where the markets move from overnight, and then you can start building support areas and moving up the chart. And like I said, right now, I think that the support is 47.53 to the lows, which is about a 25-cent gap. And as long as they stay above there, I think the market will go take out the highs again. So, I mean, it's 10:30, and it's a little more.
Okay, Pitto says horse-shit market is the best way to describe it.
Where do you get that term from? I can't believe you got that term.
Okay, let's see. Another one of our Top Stuff viewers, Scottish Knight. Lewis, can you show us what a good entry looks like on your book map chart?
Well, I can bring the book map chart in right here. Oh, by the way, right? So we're, I should have brought this in anyway, right? Look at it. We're talking about the 5-minute pivot sitting here, right? 2101. And here we got a guy solid, 1,500 contracts. So right here we're in the middle, right? We're at 99.5. We could go to here, we could go to here, right? This would probably, I mean, what's our high so far right now? I mean, I would take a look what our high is, do a rotation from the high. What have we made as a high just recently? Let me take this out of here.
99.75 now.
Is that the high?
Global size 2101.
No, and then we got our high of this move. But here's another thing we got to look. You should look at, and then I'll get back to that question. All right. So from now that we've broken out of here, we've gone right. We've gone. Here's an exhaustion. So we've gone one, another exhaustion. So 1, 2, 3. We've had a lower close now. So I would expect that this will be the next move up. The next move up, especially if you can't take out the bottom of value. I like it when this is like this with the shaded area. And also now we see that our CCI is crossed. You see this? It's crossed. Okay. This has gone from red to gray to green. We got green. We got green. Hopefully it brings green. Right? So I'm just, so we got, what did I say that high was? 98.5? No, that high was 2100 quarter minus 350. It'll be 97.5?
96.75.
Or 96.75. All right, so, so a good entry using book map and rotation, if we break down in here, right? If we break down in here. So like 97 area. Right, but this is always the problem with the markets, right? I was waiting for it to get here and it never got here, and it went and took out what we were expecting on the upside. So the key is to be able to, if you've got a bias of being long at this point, you should be comfortable with the position you have on, and if it moves down to this area, you'd be looking to add to it. Does that make sense?
Yep. All right, we got a question from one of our Twitter followers, Erica Lewis. Which moving averages are you using?
These are, Erica, these are, there's a combination of moving averages. So they're in here. There's like I'm not sure. I think it's like an MMI of MMA of 15, 59. We've got it. These aren't. We've used our own, and we kind of combine them like a moving average goulash. So they're different. These are the sort of proprietary, and we stuff that we've experimented with over the years. There are a bunch of them in there. I'd have to go and dissect the code for you right now to do that. And I don't know if and Pat would have to get on and be willing to divulge our secret sauce. But they're moving averages that are, I think that there's a 14, a 50, a 55 in there. So. Erica, that's our one woman watching the show besides Debbie. Unless Quebec's out there and Casino Girl's there. Casino, do you live near a casino at least? I hope you live near a casino. You got a name, Casino Girl. Oh man, this is brutal. This is brutal. And then we've gotten to here, like, say kind of like stalled and whatever, but it's brutal. It's terrible.
Coming up to 9:30 or 10:30 here. You want to share a story?
No more questions?
Not at the moment. You answered everything.
Well, here's another thing. I mean, so bracket E kind of moved straight up. It took us out of the middle. So let's see what bracket F does. It'll be out in a minute. If it comes here, it may fill in right here, down to here, like 98.5. And then we would hope that it would turn around and go here and have the, you know, the ability to take out the highs, you know. So also, when I see this CCI like this, and I know you guys don't have it, and we're going to make it available, it's just not everybody is being cooperative at this point. So we got to come up with a format to make it available. So we're trying to work that out now.
Okay. What is the first letter in your opening bracket?
B.
Is D. Okay.
When we're looking at a market profile, B starts printing when the pit opens up, right? So this is, you know, I'm using the day. So this is the 8:30 bell. Okay, this would be 9 o'clock, 9:30. Okay, 10 o'clock, 10:30. Right? So that's no different than putting on a 30-minute bar chart, right? Probably going to look exactly the same. It will, not probably, it will look. If I switch this to a 30-minute chart, it should look exactly like what the profile looked like, right? There it is.
All right. Okay, one of our Twitter followers, the Gabby Trader, tell the worst loss you have ever seen in the pit. Biggest windfall you've ever seen in the pit.
Well, I think we talked about this last week. Well, I told a story about Yuli, who I thought was a disciplined one-lot trader. And, you know, this is, wait, before I get to that, look at this here, right? This is the 30-minute. Now the 30-minute CCI is moving up. It's crossed, turning green. The moving averages are starting to turn there and going to green. All right. So that's you know, looking at multiple time frames are some of the things that you also should be doing, right? Which I do a lot, especially when it comes to our pivots. You know, the worst. All right. Oh, I'll tell you. This is another good story. All right.
Can I show you page?
Yeah. Let me tell us.
Sharing for a second.
Let me go back there.
Just stop right there.
Stop sharing.
There you go.
You got me? All right. All right. So, does everybody remember the movie Casino with Joe Pesci? Okay. So, do you know the story of so Joe Pesci represented a guy in real life, was supposed to be a guy named Michael Spilotro and Tony Spilotro, okay? And they lived in Chicago, and Tony Spilotro moved out to Chicago. So this was all a fictitious, that was supposed to be what the real life story was. So right before the crash of 1987, there was like 6 or 7 brothers in the family, and they had, you know, they all had kids. So there was like maybe 25, you know, kids, first cousins, and so on. So this young kid comes down to the floor, and his name is Vic Spilotro, and he is a nephew of both Michael and Tony Spilotro. So he's on the floor and he's trading. He's about 22 or 23 years old at the time, and I knew their uncles, and I knew the father. In fact, this father was either a doctor or a dentist, because there was two brothers that were, one was a doctor, one was a dentist. So one day, one of the guys who I was partners in a clearing firm with came up to me and goes, you got to buy 2,000 S&Ps. I go, what? He goes, buy 2,000 S&Ps and just be quiet. Are you kidding me? He goes, no. And I go, why? He goes, young Vic Spilaccio there is short 2,200 S&Ps. I go, are you kidding me? He goes, no. So think about what that is. 2,200 big contracts at $25 a tick. All right. So that's basically what, 50,000 a tick? Let's say 2,000. It's 1,000 times 25 bucks. What is that?
25 bucks at a time.
It's 1,000 times $25. It's 25,000. So it's $50,000 a tick, and the market is not extremely really busy. It's like in a range like this, right? So I start buying them back, and I'm buying 100 here, buying 50, buying 100, buying 50. I'm slowly buying them back. I bid on like a 200 lot, and the kid got back in the pit, and he said sold. So he's still trying to sell me. He doesn't realize I'm getting him out. I'm getting him out. So finally, we had to get a couple guys come and grab him and get him out of the pit, and they brought him out of the pit. Finally, I got out of the position, and when it was all said and done, okay, the kid made about like $75,000 when I got him out of everything, because he was selling them from the morning up. All right. So I got to tell you something. He kept thinking the market was going down. Now, two lessons to learn from that story. Number one, once he got thrown out of the pit because he put on 2,000 contracts, and maybe he had a couple $100 grand in his account. All right. Nobody ever would clear him again. So he was done in the business. So there's nobody ever would take him and clear him again. And then the second thing that happened is like maybe I want to say it was a month or two before the crash of 1987. So if he was short to 2,000, he would have made $100 million. But the moral of the story is, that's one story. I could tell you another story. Here's another good story. Oh my God. I hope there's people from Chicago on this story. Howard Jacobs, the guy on Channel 2 with the curly hair and the glasses. He was there for years. He's retired. Used to do the editorial every day. So if anyone knows it, tweet it to me. Jacobs was his last name. So he had a brother that was trading at the Board of Trade, okay? And what he did was he sold 1,000 bonds, and right before a number, and he went to O'Hara Airport, and he was on the phone with his clerks, and if the number came out, he was coming back. If the number came out against him, he was going to get stopped out, and he was going to leave town and just go away. So all these things happened, so the clearing firms came up with a thing called take a shot rule. So if you ended up putting on a bigger trade than you were able to cover with the money in your account, and it became a winning trade, okay, the clearing firm got the money, so you wouldn't get it. And if you ever did it, you'd be blackballed in the industry, and nobody would ever trade with you again. So those are a couple of interesting stories when it came to people trading larger than they could, and it could have been catastrophes and so on. Then talk about, I'll tell you about the biggest out trade I ever saw, because I was part of it. And I had a very good friend. His name was Jock. We call him Jock in the pit. And he had an out trade. While we're doing this, let's just stop a little bit. So we've gone down to 8.5. We talked about that.
Sure.
I thought bracket F would fill in at 8.5. Okay. Looks like it could fill in down to 7.25. All right. Okay. Anyway, getting back to the story, it was one really volatile day in the S&P pit, and I walk into an out trade, and my clerk Joni, we had a routine, and the way we used to do it was she would say, "Do you remember trading with so and so?" And I go, Yeah, I traded a 50 lot with them. I traded a 30 lot or traded a 20 lot. I didn't want to know if we were out or if it was a loser or a winner. She first wanted to know if I remembered the trade because I had a pretty good memory and I remembered most of the trades I did, right? All the way down to the one lots, right? Someone hit me on a one lot. So, it's sort of the game we played because, you know what? If you made a trade and forgot to write it down, I may have made the trade and I forgot to write it down, and she would say, "You didn't write it down. He's India," and then I would tell the guy he's good, So that's the way that out trades works, right? So I walk in and she goes, "Do you remember making a trade with Pat Shannon?" I go, "Jack?" I go, "Yeah. I sold him a 50 lot." He goes, "Yeah." So what happened with Pat Shannon was he had no. I said I bought a 50 lot from him. I bought a 50 lot from him. So he goes, "Yeah." He goes, "You guys are bye-bye." I go, "We're bye-bye." He goes, "Yeah." So what happened was Shannon had an order to sell 100 contracts, and he bought them instead. Okay, so wait, let me get this. Yeah, we were bye-bye. Okay, and the market was like 1,000 lower. It was $1 million winner. It was $1 million winning out trade. Okay, so what happened was the the clearing firm, the guy who managed the customer's order, he came in and it was a real. I'm not going to tell you his name, but he wasn't a very good manager of the desk. Nobody liked him, and he tried to take the $1 million winner and give it to his customer, right? So if he didn't have a if he didn't let's just say he did it the opposite way and he was sell, okay, he'd be long 200 contracts because he'd have to make the contracts good for the customer because the customer is going to want the fill back at the higher price. I know I'm going to confuse you. So he was supposed to buy the market, and he sold the contract. He sold the market. Okay, so he was short the 100 contracts from up top. So what he was going to do is just take the buys. So he was supposed to be. Wait, I'm getting myself confused. He was supposed to. He had a buy order and he sold the market. Okay, so I was a buyer of the 50 lot. So he was into me. That was great. He had to. So what we did was I sold him 50, okay, and he had already had my 50 because he was out to buy them for me in the morning, and the market was 1,000 lower. So I would be short 50 contracts from there, and it would have been a $500,000 winner. So he comes up to me and he tells me what's going on. I go, what do you mean? What's going on? He goes, yeah. He goes, this guy is trying to make me take the buys, okay, and buy them at the lower and give the $1 million to his customer. I go, he can't do that. I go, if you would have did it the other way and it was $1 million loser, you would have to be making the trade good for the loser. He goes, yeah, I know. I said, but when he told me he was bye-bye, I said, hey, Pat, it's your deal, man. Bust them, put them in your account. You make the $500,000 because I'm not going to make the money on the market. You made the mistake. He goes, you're right. He goes, but they won't, they're arguing with me right now. I said, okay, all right. So I went back to where they were all arguing. I said, you know what? I'm not busting them. That's it. I'm keeping the 50 lot. I'm making $500,000. You guys do what you want, but I'm not arguing with you. I'm keeping the 50 lot. So that was it. That was the end of the thing. So the market went down. I covered a 50 lot on the opening. I called up my clearing firm and I said, give me a check for $500,000. I got the check for $500,000. Went up to Pat Shannon, put it in his pocket. I go, here's your $500,000. You got it. You deserved it. And then he had to argue with everybody else on the rest of it because when there was a big winner there, everybody wanted it. But when it was a loser, nobody wanted it. So that's some of the things that happened. So it was long ago, but And that's the thing about when you're on a floor trader and talking about the integrity, right? Nowadays, with computers, they just lock you out. They blow you out if you got too much, too many on. And you know what? You should be trading bigger than what you have in your account. You shouldn't be doing that anyway. And that's why the clearing firms really love the fact that they got electronic trading. I mean, they can do automatic P&L, automatic margining. All these things are done, and the computer does it. You don't need, all they have is an algorithm there. You don't really need anybody to monitor it. You need one person, I think. How many did you monitor?
25,000.
One guy monitoring 25,000 contracts or customers, active customers, when they were trading to see if anybody was, had to be blown out of their position. So
the risk system wouldn't even let them go.
Your risk system?
If you had $2,500, you put a 5 lot on.
Right.
Once you go below, you're violating.
Right. And then he was instructed that once someone got below, they had to blow them out of their positions. So there's a couple of good stories for you.
Okay.
So getting back to, right, so we've gone to this bracket F again. We're back in this consolidation mode again, right? Look at all this gray area. It's got to kind of be, it's telling you that the market's got to trade back up in there, All right, but now it's, right. Oh, I got to separate the B again.
Oh, sure.
Oh, okay. God, this is terrible. This is brutal.
I got a few questions now.
Yeah, go ahead.
All right. We got a question from one of our Twitter followers. Quebec, please comment on the 2 previous days' 4 highs. What might they be saying?
No, Quebec, I said it. We're in a range. We're in a range. Right now, our range is, for me, 2103 to basically, I think it's, now it's 2091, 2092 area. We took some extremes up on both sides, and now we're trading in the middle. This gray area here is telling me that this market's going to have to trade in between there and there the rest of the day and fill in some more. Okay?
All right.
And now we're trading below value again, right? We're trading below value. Here's value. We had the first, so when I look at this, sometimes I take a look at this and I go, all right, the first 15 minutes, we made a high and now traded down to the low. So now the second 15 minutes, will we recover, right? We take that out. It's brutal. This is brutal. This is brutal. The Merc better hope something happens because there'll be nobody trading S&Ps if they keep this up.
Okay, Trader Sean from over at Top Steps got a question on crude oil. Crude oil has been making higher highs on 180-minute chart. Every attempt was on lower volume. Do you think it's possible to continue higher given the lack of participation on the highs?
You're looking at a 180-minute chart. What is that? Oh, okay. I think oil for me is basically going to $30. I don't think $35 around there, 30. I've been saying that. I think that the lack of participation. I don't think a market can move from the middle unless it gets more participation. So, this market moving down here, we're talking about that. Remember, who was it? Asked me the oil order before, and I said the key is going to be between. Now I look at this now. Bracket F moved you out of the middle, right? Took out the lows. Okay, here's your last line of defense right here, 46.90. That's the last line of defense for oil right there. If it goes under there, then the market's going to move down. So,
Frank
46.99.
Becker asked that question.
He did,
Yeah, before the coup.
right? And it's what giving a little pressure to the S&Ps now because oil has moved down, and now we're trying to get back inside, value. Pushing at 8.25 again. I mean, this is brutal. This is absolutely terrible.
Okay. Chris, who does our blog, is in here fielding some questions on YouTube. So thanks, Chris.
All right.
A couple of questions from Roger and Ronnie D.
Chris, we're gonna do a profile with Chris. She's gonna come here and trade with us one day, and talk about a woman who's been through almost every education book, and probably knows more technical terms than I do for sure. For sure, her and Pat are way above me when it comes to the technical, all the tools that are out there. But there's two things about the phenomena about this business I still don't understand. Since it's gone to the computer, I don't understand why there aren't more women who are traders. That's number one. And number two, what we're trying to do now is compile. And I asked you guys to send me an email of the best education tools you bought and the least helpful. If you could send me an email, I'm gonna compile a newsletter, sort of like, because this is all about shortening your learning curve. Excuse me. And when does the light bulb go off, right? So, like market profile, you can read 1 million books about it. Okay, I've read a lot of things about it, and it's difficult because I don't really care to read technical stuff. I like to read biographies, and mainly my own. But anyway, so but unless you're watching this thing every day, you won't. It'll take a while for you to go, oh my God, here's the previous day's mode. We got back inside value. Support. Look at this. We got back inside here. And then it went up there. All right? So, I mean, it's going to take you, and it all becomes this whole thing about market timing, right? So if you bought the market, because we were talking about the market taking the 5-minute pivot out, all right? Let's say you just bought it here. You bought it at 20.99 half, right? You were sitting on it going, oh, okay. Look at this, 5, 10, 15. When 5, why we've been on 5, 15, 5, 10, 15, 20, 25 minutes up or down, but we didn't take out anything that was major. We're still here trying to get back inside value. That's going to be the key, getting back inside value. And then you go to Bookmap, and Bookmap, right, has got those areas that they had the big orders at, they got filled, okay? And this big guy's still sitting up here at 2101, right? So I'm telling you, it's really frustrating. I get it, and especially when the market is this slow. You look at here, I look at the advanced decline here. It's moving up. Okay, it had its down, right? Important, I like to look at this. I think I was showing this yesterday that, why this thing is ticking down. Well, remember, this is a 1-minute chart versus a 5-minute chart. So right here, the advanced decline was still ticking up while we weren't, right? We were going down. So this was telling me that this may be leading, okay, now that we're rallied back to 99 even, okay? So these are, all these things that I watch, and then the CCI never crossed the center line, okay? We're now back inside value. Well, we're barely inside value, right? We're right in the 8. We're trading it. We're in, we're out. We're in, we're out. Sort of like a turn signal, all right? I had my mom in the car one day, and I said, I'm going to put the turn signal on. Let me know if it works. And I put it on, and she went, yes, no, yes, no. I'm going to tell you the lotto story one of these days. It was the best story ever. My brother pulled the most horrendous. I'm going to write about it. I already wrote about it. It's going to come out. You're going to see it. It's going to be one of the what my brother did to my poor mother about the lotto. She thought she won $40 million.
Got a few more questions.
Go ahead.
All right. So I just want to tell Roger, too, on here following us on YouTube, that I'll put up the links for the market profile stuff that we do on our website, so you can take a look at that stuff.
Okay. Yeah, remember, we've got go to the education on the website. You can find the links to that.
All right.
We're looking at the charts, right?
Yeah.
Okay. So we're 99, right? So what was the low of that break? So we got sort of a double bottom here at 2097 plus 3.5 takes us to where? Should be 90.5. 2105, right? 2105.
All right. One of our YouTube followers, Tom C.
Okay.
Can you talk about trading the larger size? I am profitable with contract size 2 to 6, but would like to scale up. Not quite sure how to do that without fear of loss creeping in.
Well, what I would do is I would so when you scale, so I assume you scale in and scale out, and said you'll scale up to 6 and scale, and then you get out as you're scaling up and down, selling and buying, right? So I would come up with the plan that says, look, if I started with 10,000 or 20,000 in my account, I'm now up to 30,000 in my account. Now I'm going to add another contract, okay? So that and if I give back 5,000 of that 10,000, then I have to go back to my other size, all right? Because that becomes a big issue with traders. That once you got to find the size that you're comfortable with. There's some people, I guess Vic Spilaccio was comfortable with 2,000 in his account, right? So you got to come up with a size that you're comfortable with, because you'll get to a size that will throw off your thinking, because all of a sudden you'll be looking at the dome and you're going, huh, I got 10 on, and now every tick is what, $125 a tick, right? So now I'm looking at every handle, I'm looking at 250, what is that, 500, right? So from 9 even to 2101, I'm either up or down $500 more. I'm going to tell you something, it's great when you're up 500 more, but when it start going against you, right? So if you were too big right here and it got down to this area, you'd just start panicking, because you'd be looking at your dome going, I don't know, maybe I'm too big, right? And instead of looking at where the market was at and saying, well, I'm still green, right? Okay, so it's like it comes to this whole money management thing. Like I read a book on money management and for blackjack, right? So this guy, his money management system was, and we talk about unit bets, right? So he would talk about, if you started out with $1 as your unit bet and you won $1, you take another $1, put it on top. If you win that, so you got a $3 bet, right? So you got your $3 bet. If you win that, you've won $6. Your next bet is $1 again. So then if you win that, you put it on, because cards are supposed to be streaky, right? So the whole key in blackjack is not only to catch the streaks, but to manage your money and stretch it out. So, and the way I did it, bet $1, you win, you get $1, you bet another $1, you win. So you get 2 wins and basically 3 wins. You ended up with $6. So now you can lose 5 hands in a row and you're still back to your original unit bet, right? So it's the same thing here. You're going to have to do your money management with, with your trading size also. right?
We got 1 minute here. You want to go for one more?
No, that's about it. I think the market definitely seems to has an up bias, but they're gonna right now these things have straightened out. Okay, we're gonna straighten out. We're crossing the center line. Still green here. Okay, these are flattened out, and we can't get inside value. I think it's going to be stuck between here and there until the later part of the day again. Okay, and that's what we're going to be stuck with today. So I hope this has been great. Debbie, you're going to sign off? You want me
I
to
can
sign off?
certainly sign. I can certainly
I will.
sign off
Listen,
for you.
everybody,
Yep.
see you Thursday. I hope the market picks up and we get some more action. And hopefully this has been helpful for you. Everyone, good luck. Talk to you Thursday.